Good afternoon. My name's Campbell McCrary. I'm a Vice President, Capital Markets at AABFF Capital in New York City. Welcome to the AABFF Capital Inc. live webinar with Aftermath Silver. Aftermath trades on the venture as AAG, Alpha Alpha Golf, and as AAGFF, Alpha Alpha Golf, Foxtrot Foxtrot on the OTCQB. Hope you'll enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or simply email them in. We'll try and ask the questions in real time during the webinar. AABFF is a New York-based specialist investment management and finance firm focused solely on the natural resource sector. All important disclaimer, this call is for informational purposes only. Presenting today is Mike Williams, Chairman and Director, and Ralph Rushton, President and CEO. Mike has over 20 years of experience as a senior executive within the mining industry and is exec chairman of numerous public companies, including Underworld Resources, which he sold to Ken Ross for $138 million. And with us, Ralph Rushton, President, CEO, and Director, a geologist by background. He has significant exploration and mining experience in a number of geological settings and terrains, working for Anglo American and Rio Tinto as a director of 4 venture companies and an advisor to other exploration companies, and has helped raise over $400 million. Again, following the presentation, members of AABFF Capital ask questions, and we really would love to have yours sent in. If you can't figure out the control panel, just email them, and we'll do our best to incorporate it into the deep dive. Welcome, guys.
Thanks, Campbell. Appreciate you taking the time. And thank everyone for attending. What I could maybe do is give everyone just an overview of the company, sort of what our mandate is as management. And then, Campbell, if you could show a video that we've had prepared that will give you an overview of what we consider to be our flagship project, Barranquilla. And then perhaps we could have Ralph take everyone through the presentation, and as you suggested, will be available for questions to follow. So Aftermath Silver was put together, as the name says, to focus in the silver space. Ralph and I and our third partner, Peter Valgaris, were always of the opinion that the silver space is unique. It's difficult. It's difficult in the sense to find projects that meet the criteria that we think will come into vogue with producers, the investing public, and various other people going down the road. But that criteria is reasonably simple. We are looking for open pit projects that have a 10 to 15 year mine life that will not only work in this current silver environment, but would work at lower silver prices. As management, we have to be concerned with downside, and we think we've put a safety net in the company for investors by having our projects work sub $20. Now, if silver continues the way it's going, the numbers certainly change dramatically. The leverage that we can offer based on our project, we think is one of the best in the industry. Our comparables to other companies are certainly, we think we're undervalued still. I know every management team says that. After I can get into a little bit more detail on that, why we think we're undervalued, but it's probably best post Ralph giving the presentation. So on that note, Campbell, if you could show the video, I think it goes a long way in sort of highlighting the Barranquilla project, which is one we recently picked up from SSR Mining, which was the former Silver Standard. Silver Standard is focusing more on gold. They've just gone through a merger with a large gold company. So fortuitously, we were able to get a deal done with Silver Standard. Now, at the time, we paid 8 cents an ounce for this ore body, and we were valued at 28 cents an ounce when we made the acquisition. I haven't done the numbers today, but I think we're closer to 75 cents an ounce value. So it's certainly been accretive, but we have a long way to go. I think, and several other people in the industry have commented, this could be one of the best undeveloped assets in the Americas, and it'd certainly be available to answer questions pertaining to that.
I'm ready
So
to
on
play
that note, Campbell,
the video. Yeah, here we go.
if you could play the video.
You're using computers, please turn on your speakers. It won't broadcast through phone line if you've dialed in. Okay, guys, unmute yourself, and Ralph, I'll give you control of the show again.
Okay. Sorry, where's it gone? There we go. Okay, thanks for attending. My name is Ralph Rushton. I'm a geologist by training, as Campbell mentioned. I'm the president and CEO and the director of Aftermath Silver. Mike gave a brief overview there of the rationale behind the company. We believe we've got a good combination of three main factors. Silver, it's a commodity that's been performing well recently, and there are very few pure silver projects out there at the moment. Management, we've got the ability to raise capital. Mike and I have got substantial experience on many different aspects of the junior markets. And we're in two premier mining jurisdictions, Chile and Peru, and in particular in Peru, we're in an area that's mining friendly, and both countries have a long history of silver mining. The corporate objective was to build a silver-focused exploration and development mining company, acquiring assets with existing infrastructure. We weren't looking for projects that were grassroots, early stage, with a long lead in time to development. We were looking for projects with infrastructure, high-ranking mining jurisdictions, and the objective was to de-risk these projects and demonstrate they're potentially open-pittable. Recent developments for the company: we completed a 43-101 compliant mineral resource for our Chayacoyo project that demonstrated about 35 million ounces in indicated and about 11 million ounces in inferred. That's an increase of close to 10 million ounces on the historic resource from that project. We signed a deal to acquire the 100% of the Berenguela silver copper project in southern Peru from SSR, and that's going to cost about 12 million US over 6 years. We've paid them 3.5 million in shares, and they also get a 1 to 1.25% NSR. And we closed a 17 million Canadian no warrant private placement to fund our work over the next 12 to 18 months. It was about 26 million shares issued in a no warrant financing. Those come free trading on January 15th, which may present a buying opportunity if we dip as a result of any selling. And after recent property payments, our treasury stands at about 15 million Canadian. Myself and Mike Campbell mentioned our bios very quickly. Peter Vulgaris is our main technical consultant. He has extensive experience and was very senior in Robert Friedland's organization when they developed Oyo Tolgoi. He's a mining engineer and a geologist. Keenan Hohol was a former general counsel of Pan American Silver, very experienced on resource law. And David Terry, some of you might know from his role as a director of Great Bear. He's also the CEO of Genesis. This is our recent share price performance. We're currently, I think we closed at about $1.64 Canadian. We've got about 132 million shares issued and outstanding, fully diluted about 160 million. Our largest shareholder by far is Eric Sprott with about 24 million shares, close to 30 million fully diluted. And we have excellent trading volumes. Our average is close to 400,000 a day on the venture exchange and about 300,000 a day on the OTCQB. So very, very good trading liquidity. And if we look at our 6-month share performance, to a certain extent, it's tracked the silver performance of silver recently, but you can see that the Beringala acquisition led to a substantial re-rating. And then with the uptick in silver, we've outperformed the silver price. And over the last month or two, we've gone from about 80 cents up to about $1.60. This is where our projects are. Southern Peru, Beringala, it's close to the cities of Puna and Arequipa. And then in northern Chile, Chayacoya and Cachinal, silver gold projects. Beringala is a silver copper project. I'll briefly go through Beringala. It's a silver copper project in southern Peru. This is what it looks like on site. Very open country. It's about 5 kilometers by road from the nearest town. Very easy access. Here's the infrastructure. You can see we're on the main road from Arequipa, just about 5 k's off that. And there's also a rail line passes by the project that goes to the port of Matarani on the south coast. And there's a national grid to the nearby town of Santa Lucia, which is 5 k's away. So from an infrastructure standpoint, it's excellent. This is Santa Lucia. It is a mining town. The people there are pro-mining. We have extensive historic data available for the project. It's been worked over the years by Valor, by SSR, and also by Rio Tinto. More recently, Rio were looking for a high-grade deep feeder to the project. There's about 320 holes have been drilled into it. We have all of the data, and we have most of the core and RC samples. There's also an historic JORC compliant resource estimate on it and some initial PEA level engineering work that was completed by Valor, an Australian company. This is the historic resource. I would stress that we're not treating this as a current resource for marketing purposes. This is a historic resource. At some point, we will work to bring this into current status. Valor defined a measured indicator of around 36 million tons, contained 98.7 million ounces of silver, with an indicated and inferred resource of about 28 million. And there's also a very strong copper mineralization in this, close to 624 million pounds in the measured and indicated, and another 147 in inferred. Grades around 80 to 100 grams per ton for silver and up to 1% copper. The mineralization is hosted in manganese carbonate replacements of limestone. It's exposed along a ridge. There's 2 types of mineralization: mantos, which are sort of flat-lying blankets of mineralization, and breccias. But one of the reasons why we really focused on this project and were keen to acquire it is that the project is exposed at surface. For the first proposed 4 or 5 years of a mining plan, there would be a very, very low strip ratio on the project, perhaps as low as 0.5. So you're basically straight into the mineralization at surface. Again, this is what it looks like. It's nice open country. This is actually on some rehabilitated drill pads. So very easy to get around. It's about 4,000 meters, but very close to town and very easy to get around. Our planned work for the project, we're currently preparing a 43-101 technical report. The QP has finished that, finished his site visits. He's done his QA/QC on the core and drill hole samples. We'll be looking at completing a LiDAR survey for accurate topography purposes for the engineering and for drilling. We're reviewing historical metallurgical test work. There's a few hundred kilograms of material at a lab, our Senko lab in Australia, that we plan on running test work on. And we're planning for PFS level engineering studies over the next 12 to 24 months, which will include additional drilling if required. And we've also initiated our first community engagement work, which was signing up the underlying landowners whose land holdings cover the project. We've had a very good response, and we've successfully completed that work. In Chile, we're exploring Chayacoyo and Cachinal. Chayacoyo would probably be our second priority project. It's close to the city of Iquique. It's just off the Pan American Highway. This is what the country looks like. Very open. You can drive straight to the project. It's about an hour off the Pan American Highway, and it's accessed by the main mine road for Teck's Quebrada Blanca project. It's 130 kilometers from Iquique. We have an option to purchase 100% of this from Mandalay Resources. The next payment is scheduled for the end of April for this. We have some limited water rights, about 12 litres per second. And there was a current resource estimate completed by us in December 2020. This is the infrastructure. You can see the red is the Pan American Highway with the access road coming off to the north. We have rights to use that road until Quebrada Blanca closes down. And QB are actually also Teck are building a water pipeline through our concession. They've been granted an easement for a pipeline that's going to carry between 1,300 and 1,400 litres per second of desalinated water, and that's passing through the exploration tenements. There's also access via road to the south. This is the mineral resource that we defined in December 2020. It's about 6.6 million tons open pit and underground, most of it in open pit, at 165 grams silver for a contained silver ounces of 35 million in indicated, and inferred is about another 11 million ounces, 2.8 million tons at 124 grams. Again, open pit and underground, but the bulk of the resource is in open pit, which is what we wanted to demonstrate. That's a substantial increase on the previous resource on the project, which was somewhere around 35 million ounces. 84% of the resources fall inside a conceptual open pit shell. Our drilling and our work over the next 12 months will be to look at these holes that pass through the hanging wall to the main vein. The main vein here is shown in red. Our objective is to look at the holes that have cut through the hanging wall sequence to demonstrate that there's additional mineralization that can be brought into the resource. It will be lower grade than the main vein, but we anticipate that it's going to be a larger open pit resource. And this slide demonstrates what we're looking for. You can see in this area, these holes have passed through hanging wall veins that in some cases were not included in the resource, and they can be very high grade, up to 1 kilogram per ton silver. So our objective is to bring these into the resource. Work is starting on that, I think, this week. We've got a geologist on site. He's going to be cutting through, he's going to be cutting the core, about 3,500 meters of core that was never assayed originally. This is the access road where it separates from the QB2 access road, haul road. And in the distance, that hill there is where the mineralization is. And this is the core storage facility on site, very well organized, very easy to access. There's no rain falls in the area, so one of our geos will be spending the next 3 months going through this and pulling out specific holes to cut and assay them. So fieldwork's about to start, and that will hopefully lead to a revision of our resource estimate, perhaps towards the end of this year. And it will also feed into for planning for a 2021 drill program, Q2 possibly of this year. And the third project is Cachinal. It's another silver gold project in Chile. On the left, you can see what it looked like 100 years ago, and on the right is the current view. It's pretty much the same view. It's another epithermal system, silver gold quartz veins with potential for higher grade silver at depth. Again, it's very easy to get to. It's about 45 minutes off the Pan American Highway, 170 k's from Tal in northern Chile. It's 2,700 meters, so not particularly high. And we have nearly 5,000 hectares there. Power lines located 15 to 30 k's from the property. So here's a map of that infrastructure. And the access road passes by an existing gold plant at Austral Gold's Guanaco Gold Silver Mine. There's a current resource on that we finished in August of this year. 5 million tons at about 100 grams silver. So for a contained indicated about 16 million. Inferred is about 500,000 tons, at 145 grams for about 2.5 million ounces of silver with some gold credits. But again, the bulk of that resource is potentially open pittable, and that's the target that we're looking for. So this is that same view. You can see in the right foreground there a couple of the historic drill holes with white piping put in to mark the locations. And this is an old heap leach pad on the property. We believe there's between 100 to 150,000 tons of material on this that we don't think was leached. It's been sat there oxidizing quite nicely over the last 30 to 40 years. So this is potentially an early start to the project. So the Catchinal work program that we envisage, 3D laser surveying of the historic mine workings. We're looking for quotes on that at the moment. We need to know where they are for the resource estimate. And we'll be permitting a drill program, including possibly drilling those heap leach dumps and extending the historic soil sampling grids on the project as well. So not as an extensive drill program as the other two projects, but we'll be completing some work there to bring this up to potentially expanding the resource in the next year. So the next 12 months, Beringala, we're looking to initiate PFS level engineering studies with perhaps some infill drilling or metallurgical drilling. We'll be doing met sampling and test work and geotechnical work and LiDAR surveying, hopefully in the next 2 to 3 months once we've got a contractor lined up. Chayakoyo, cutting and assaying of 3,000 meters of existing core at the project will be the most imminent news from that. That will probably start coming in towards the end of Q1. Design and execution of drilling will be related to this program, directed to increase the mineral resource, and there'll also be met test work going on in the background. And Catchinal, 3D surveys of the historic workings of Catchinal with permitting of a planned drill program. So in summary, I know that was a very quick run through of the projects. We have 3 active projects. We think we're now one of the leading silver development and exploration companies on the TSX venture. All 3 projects are being assessed for their open pit potential. We don't see these as underground operations. Our objective is lower grade, but higher tonnage projects that can produce at a relatively low cost. It's a very attractive project pipeline. We are being brought additional projects all the time, which we review, but they need to stack up against these. It's a positive mining environment. Northern Chile and Southern Peru, both favorable mining jurisdictions, and certainly for all 3 projects we have supportive communities as well. And the company also has excellent liquidity and visibility. We think we've got the story out quite effectively, and the trading liquidity I think reflects the marketing we've been doing. So in a nutshell, that's where we're at with the company. Perhaps if Mike has anything to add at this point.
No, I think you covered a lot off on that, Ralph. I think if you look at Chile, the key tenet there, we believe we're heading to have enough ore to have an open pit. Our upcoming drill programs will demonstrate that. The key thing in Chile is always water, and we think we have a strategy for that. In Peru, what you always look to is, do the companies have a good understanding, or do they have any social issues? Where we're located, and Ralph can talk to this in greater detail, I think so far so good. There's been no red flags. The community is on side, and we hope to keep them that way, but we are cognizant of the need to do so. Our first hire going forward on the development side will be a vice president of community relations, and I think that's a key thing in South America, particularly Peru and certainly in Chile. So we mentioned in our first press release announcing Beringala that it was transformational. I think it is, in the sense that it could be a company maker for the company. One question that Ralph and I are always asked, are we planning on putting these projects into production? And I think the answer is yes. We're certainly capable. Our technical team has done it before, and Peter Valgaris has been involved in one of the biggest copper gold deposits in the world, and probably the latest large copper porphyry to go into production. He did all the underground development work and had previously worked at gold ore bodies, both open pit and underground in Australia. So we have the ability to do it. I do think, though, that if you look at the suite of projects owned by the producers and some of the majors. One thing a lot of them lack is low-cost open pit ore bodies. So once we finish our pre-feasibility study in 24 months at Barranquilla, and concurrently we'll be doing a preliminary economic assessment at Chayacoyo, I think there already is, and there will be further interest in those economics that we demonstrate. And as a board, we'll have a decision to make at that time, should people prefer to have them in their suite of projects. So, but having said that, Barranquilla potentially is a company maker, and that's not to say we are capable of putting it into production. We can raise the amount of money that would be required, and we have the technical people to do that. So I think we're well situated in this market. We do work at a lot lower silver prices. We think we'll be able to demonstrate that, but the leverage and torque that we possess, given the size of our resources, is certainly, I would think, the upper echelon of the silver comps. So if there are any questions, Ralph and I'd be happy to answer any.
Well, we do. You know, doing back of the napkin analysis, I guess you would kind of come up with about 200 million global ounces. Is my calculations about right?
We unfortunately under 43101, Campbell, we can't really add the various categories of resources together, but we have two current resources and one historic. All three have, you know, substantial ounces on them, but we can't under regulations add those together.
Okay, and then what is the silver bearing mineralogy at each project?
And the two epithermals, it's the usual sort of silver sulfur salt minerals. At Barranquilla, we're not completely clear yet that what some of the work we're doing at the moment with the metallurgical stuff is characterizing whether the silver is with copper, whether the silver is manganese. So that work is underway at Barranquilla, but it's the standard sort of epithermal mineralogy for Chayacoyo and Cachinal.
Would
I
Barranquilla
just wanted to add on the resources. I think we're going to go on Barranquilla and do a 43101 resource report. You know, hopefully within the year. And once we do that, it'll give us a little bit more leeway to talk about the resources. Right now, it's a little bit like having one hand tied behind your back, but you know, we'll deal with it as we move forward.
Would Barranquilla be expected to produce a concentrate and Chayacoyo and Cachina Adore? Is that right?
The way we anticipate at the moment is no. Barranquilla would not be concentrate. Barranquilla would likely be silver and copper metal. Then yeah, Chayacoyo and Cachinal would both be doré as well.
Okay. Is there evidence of other occurrences of interesting mineralization away from the established resources at each project?
Barranquilla in particular has a couple of very attractive exploration targets on the land concession. We call them targets 11 and 12. Those haven't been drilled. They're both defined by soil sampling, rock chip sampling at surface, and we're seeing grades up to 400 grams silver and a couple of % copper locally on those two targets. They are both targets that would be drilled hopefully this year. If we have a drill rig on site, or maybe two drill rigs on site, we would look at putting some holes into those targets. But we need to demonstrate, we believe we need to demonstrate internally that the main project of Barranquilla works before we really start putting a lot of money into drilling additional targets. At the moment with Chayacoyo, there are a number of other veins on the project that we would look to put holes into, but again, I think it needs to work on the basis of the resource that we're working on currently before we really start sort of sticking holes into additional targets. Yeah.
Okay. I was going to add, Ralph, I think on Chayacoyo, the ore body is open. So through step out drilling, we think that that's our number one target to add ounces, both in the hanging wall and the vein. So we'll do that. And once we've done all of that drilling, then we could look at the regional targets in that area. Chayacoyo is a big system. And I think we've only tested part of it, but we need to focus on what's going to add ounces to the mine plan. Now at Barranquilla, we've built internally a mine plan, and the good news at Barranquilla is most of the previous drilling would go into a mine plan, and we'll be able to demonstrate that at our pre-feasibility study. But any step out holes from the previous drilling, I think will add resources should we hit. Now, the catch there is, we'll look at it and we need to add an additional 20 million ounces to bring them into the mine plan, because anything less than that, it'll just add mine life. But what we would like to do is add throughput through that type of drilling. And as Ralph said, those other exploration targets could be significant, but we want to demonstrate the economics of Barranquilla before we chase and even make it bigger. So that's the goal there moving forward.
Yeah.
How much is infill and how much is step out drilling, I guess, also?
Barranquilla?
Yeah.
Most of the drilling we're going forward at Barranquilla is going to be three things. It's going to be infill, because we need to tighten up the drill spacings, and we need to bring the inferred resources into measured and indicated for the pre-feasibility. But we need to do a lot of metallurgical drilling, and we need to do our geotechnical drilling. We think that there's enough, we have enough already. We don't need to expand it. We need to tighten the numbers, demonstrate the economics. And I think Ralph would agree. The key thing is when we put out pre-feasibility, we want to demonstrate the metallurgy. On these type of systems, these big systems, you have to demonstrate that the CapEx is accurate, and it will be a large CapEx, but it will have an exceedingly large free cash flow in our opinion. But at the same time, the met is going to be paramount. We want to produce a silver doré through Merrill-Crowe, SXEW copper, and then we'll deal with the manganese, probably through producing a powder that's used in the agricultural industry rather than producing a metal, because to produce a metal with manganese will require significant amount of additional capital, and the trade-off probably dictates that we wouldn't go down that road. But I can't comment concretely without doing the pre-feasibility study. That'll answer all those variables that I think the market will want to see, and we'll be able to deliver on hopefully in about 24 months, say 24 to 36.
Thanks a lot.
Thanks, Mike and Ralph. You answered all of my questions, Mike, on the most recent chat there, so that's helpful. But maybe if you can just touch on, obviously a lot of things go into it, but valuation and why you think you're undervalued. Where do you think you should be trading today?
Yeah, again, you have to be a little cautious of 43-101 and sort of disclosure regulations. But if you look at our peer companies, and we've looked at a lot of them in terms of sort of enterprise value per ounce, we felt a few months ago that there needed to be some re-rating on the basis of our current assets up towards what the industry average was. The number evades me at the moment, but we felt that there was a substantial chance for re-rating just based on the average industry metrics at the moment.
The other thing you have to look at, I think, with Aftermath is the quality of the ounces. These are ounces that will stress test down to, sub $20 silver. A lot of the larger resources and some of the other silver dominant companies, I think need $30 silver to make work or higher. Certainly $25 silver is where they're looking at. The long-term consensus pricing right now for silver is $18. And if we were going to look at economics, we would use $18 silver. But on similar style of deposits, just to give you an idea, a free cash flow on some projects of this size could be anywhere from 2 to 3 billion at, say, $17 silver. But if silver's at 25, it goes up to $3 to $4 billion. That's how much leverage there is on silver prices on large silver deposits. So that's what we hope we can demonstrate through our pre-feasibility. We can actually talk about numbers like that rather than surmising what we think they'll be. But there is but at the same time, for us, we need to protect the downside. Ralph and I have both been in the markets, and Peter for close to 25 years. We've been through 3 major cycles. You don't want to be whipsawed by a cycle, or certainly a down dip in a cycle just before you're about to finance a major project. So that's what makes, especially Chayacoyo and Barranquilla so attractive. We believe that we would be able to demonstrate that they're low cost, will work at lower prices, which certainly gives your bankers a comfort level, and hopefully the shareholders as well. I think we're transitioning from a retail to an institutional shareholding. Eric Sprott as a lot of people are aware, is certainly an advocate for a lot higher silver prices, but we'll make it work at these levels and even lower for Eric. But that's the type of investor we're seeing now attracted to this company, because we can start to quantify what we have, and I think that's a key tenet moving forward.
Yeah, well put. Maybe we just touch on, you mentioned sort of targeting that hanging wall and adding sort of ounces that way. How do you think the dimension and the shape of the resource will change after, let's say you have success where you expect?
I think within that conceptual pit shell, I don't know if I'm still being, my screen is still being shared here. I think within that conceptual pit shell, we're not going to see a great deal of change of the change in the sort of pit shape there. What we're going to be doing is looking for additional veins in this sort of gray area in here. So mineralization that hasn't yet been sampled and assayed. The early drill programs focused primarily on this pink structure here, the Lalonde vein, and they didn't take into account pretty much anything else. So if you recall this slide, we can see a whole series of smaller veinlets in the hanging wall. They will fall within that optimized shell, I believe, but possibly will extend further down. So I wouldn't anticipate a great deal of change in the shape. Perhaps down the road, as we define a larger open pit resource, you might see more tons and lower grade, but it's going to be open pittable. So the cost structure would potentially come down, so you can handle a slightly lower grade.
One thing I would add is, if you look at our last press release where the resource increased, we have an underground component included in the open pit component. I think that one of the goals that we have moving forward is to see if through further drilling and tightening up of the drill spacings, we'll be able to bring some of that underground mineralization into an open pit. And I think that is what you asked. So some of the underground might become open pittable, but it's going to require further work on it. When we picked this project up from a company called Mandalay Resources, they viewed it strictly as an underground. They wanted to focus on the 178 gram per ton vein. We thought that the hanging wall could be brought into the open pit. Now, I think conceptually, the last press release proves our theory is correct. Moving forward, going to PEA, we'll be able to quantify it further. That yes, in fact, we're going to optimize that pit moving forward. So right now, we're happy where we are. We've proved what our concept is. It's just a case of further drilling to give a higher comfort level and de-risking the project.
Yeah, okay, great. Thank you. That's all from me. Stu?
Yeah, thanks for the presentation, Ralph and Mike. So while we're on Chayacoyo, the nearby, like Teck is constructing the large desal water pipeline in the area. Is there any update on that construction, or opportunities for companies like yourself to piggyback off that?
Construction's actually started on that. When I was there early last year, sorry, they were starting to clear the route for the pipeline. My understanding is going to be 2 pipes there. There's going to be a water pipe and a concentrate pipeline going back to the coast. But there's actually another water pipeline that's going into very close to the project concessions. It's going to Collahuasi. So we're looking at 2 major desalinated water pipelines coming very, very close the project, one actually going through the project concessions. So as we mentioned, TEC have an easement through the north sort of eastern side of the project here. I believe the other pipeline is coming somewhere through in this region in here. So there will be extensive water coming through close to the projects. At some point, yes, we would probably have a conversation with one or both of those companies to see if there's potential to access that. We have permission for 12 liters per second. We believe that we would probably need about 25 to 30 liters per second to construct a viable open pit operation there. So we would need to find some additional capacity, but not a great deal.
Gotcha. Thanks for that. And then I guess whilst we're on water, what are the options for water supply at Beringula?
Beringula, there's an active water permit there at the moment that allows us to draw, I think it's 27,000 or 28,000 cubic meters from a local river for exploration purposes, but it's reasonably wet up there. I don't think water's an issue. I mean, we are looking at the environmental and the permitting side of things at the moment. I'll be better placed to answer that question probably in a couple of months' time. But there is an existing permit that allows us to take water. It certainly wouldn't be enough for an operation, but the supply is there locally.
Yeah.
So
Okay.
I think the thing at Beringula is going to be the water discharge, which we'll address at pre-feasibility rather than access to water.
Yeah. Gotcha. And then you mentioned permitting. If you could give any update on how you're finding, permitting for drilling in both countries, and any news you're hearing on other companies getting mining permits in either country.
Well, both Beringula and Chayarcoyo do have some current and still valid drill permits covering some of the areas we want to drill. In Chile, it's much easier if you permit existing disturbances. So I'll skip forward to this photograph from Cachinal. There you can see these sites here with the old drill holes in. Permitting those is very, very easy. That's maybe a couple of months. Permitting greenfields drill holes in Chile can be quite a bit longer, but that's one of the reasons we're looking at projects with disturbances or former mining operations on them. It makes it much easier to permit. Beringula, there is a drill permit extant that's still valid, covering I think most of the core part of the mineralization there that we would like to put additional holes into. Most of the permitting at Beringula hinges on first securing landowner access permission, which we've done. That's now in place. So from there, the permitting should be fairly straightforward. There are existing permits covering nearly everything: water, environmental. It's a question of renewing them.
And I think the Peruvian government has come out publicly and said they're going to streamline the permitting of exploration permits, which was certainly the industry was glad to hear that. And I think that statement was made about 4 months ago. So we'll see going forward, but we're optimistic.
Yeah, great. And then someone asked a question about the recent elections and upcoming elections this year, and any impact or change in sentiment towards mining.
No, not in Chile. Talking to our contacts down there, no, they don't believe there's going to be any impact because it's such a large contributor to the economy. And certainly it wasn't mentioned in the renegotiation of or I don't believe it was mentioned in the renegotiation of the constitution in Chile that's underway at the moment. Again, in Peru, I think it's such a large contributor to the economy, but you just need to be cognizant of local community differences, indigenous peoples. So as long as you're cautious and you're discussing with the communities at every step of the way, it should be doable.
Very good. Thanks for that. Artie?
Thank you. How extensive was the historic mining at Casenal? At what depth they stopped mining, and what changes in terms of ore characteristics at that depth?
I think they stopped at about 500 or 600 feet, so a couple hundred meters down. One of the reasons that we're doing the surveying is there aren't accurate there isn't accurate underground maps. A lot of this stuff was sort of hand-to-mouth mining. So for the purposes of our drilling down the road, we need to know where those workings are. I think there was about 900,000 tons taken out of there, something like that. Chayacoyo, again, it's 500 or 600 feet of mining, but dry, no water, it's completely dry. We don't have an accurate figure for how much was pulled out of that. There was some small production from Berenguela, some small high-grade silver production from there, but it was very much sort of scratching and a few added, so nothing serious. But I'm not sure where the transition is at Kachinal. That will sort of emerge from the drilling as we go forward. But a lot of what you see at surface is oxidized.
Thank you. What are the evidences of high-grade ore shoots at Kachinal project, and what is your approach?
That's to be determined. We've just sort of looked at the overall resource there. There are a number of potential extensions to that resource that were identified during our 43101 work there, both along strike and down dip. Again, we're focusing on lower grade near surface stuff rather than, you know, deep sulfide that might have higher grade in. I mean, our thought, and it comes back to a question earlier on about drilling additional targets. We're trying to be disciplined about demonstrating the economics rather than just drilling for the sake of drilling. We want to demonstrate the project economics for all three projects based on what we know of and what we can do fairly easily and cheaply. If we can't demonstrate the economics of that, then the projects probably don't make it at all. So there wouldn't be a great deal of point in stepping out 500-600 meters and drilling for additional little veins. That's not going to help us. So we're trying to be disciplined, bringing an economic viewpoint to our exploration programs for these projects. But the high grade at the moment at Kachinal, I'm not completely sure. Typically, the old artisanal miners would have taken those first and left the lower grade mineralization.
Thank you. And for Chayacoyo project, you mentioned the previous operator just worked on the Lolon vein, and the veins close to that main vein, are those discovered by you, or they knew the veins were there but they just wanted to put one single open pit there?
No, they've been known about for a long time, but the Lon is a fairly substantial vein. It's quite a big vein, so it's much easier to sort of mine and stope the large vein rather than scratching around on smaller veins. So those veins make sense from a bulk tonnage open pit perspective. As an underground perspective, you know, if you're looking at a 50 centimeter or a 1 meter thick vein, it's tough to follow those things with underground mining unless you're really on you know, a driller with a jack leg and really focus on very small scale. So I think they were ignored because they probably weren't easily mineable, but as an open pit scenario, they work.
Ralph, I think on the Lucy vein did come into the resource, so that's one that will probably be our secondary target.
Yeah.
Thank you so much, Campbell.
How much to build Berenguela mine, and how much have you spent there so far?
Well, it's tough to comment on that. Again, Campbell, under disclosure regulations, if we start speculating, you know, we could get ourselves into a little bit of bother. There is an existing historic scoping study completed by Valor Resources that's available on the ASX in Australia, but we're not by law allowed to quote historic scoping studies that were put together under other mining codes. So I can't actually comment on that. What was the second part of your question?
Oh, and how much have you spent so far?
Our spend at Berenguela so far has been community work. It's been 43101, probably a quarter of a million on actual work, and then we've had project acquisition costs. We paid a couple of million US to SSR earlier, well, towards the end of last year. So acquisition costs probably about 2.6 million Canadian so far, with some share issuance, and probably $250,000 so far on exploration costs. But exploration was slowed down initially, obviously because of COVID. We weren't able to get on there as early as we wanted. That's going to ramp up. That'll ramp up substantially though over the next 12 months as we move to metallurgical test work and infill or geotechnical drilling. So that amount will ramp up.
I don't add, Campbell, at Berenguela, your CapEx will be significant, but it will be in proportion to hopefully the NPV, net present value, and certainly the free cash flow. Everything will be in line, but it is a big project, and as I said, the CapEx costs will be commensurate with that.
Yeah, and if anybody's really interested, we can, they can email us and we'll send them we can send them a download link to the historic work that's been done there. That I would stress that we haven't done enough work to confirm it, and we are not relying on that historic work. So, but we can certainly send a link so you can go and have a look at the historic engineering work that was done by the Australian company.
Okay.
Which we consider to be preliminary, like really not back of the napkin, but it's not at the level that we would like to see, but it gives you an indicator.
Okay. Manganese. Can you talk about other similar mines projects with high manganese content, and if it interferes with metallurgical recoveries of gold, silver, copper, and how others handle the manganese? And then maybe for other people who don't quite understand that, well, why would manganese be?
Sure. Manganese can be a little bit of a chemical sponge. It can sort of absorb other metals, and it can cause issues with metallurgical treatment. There aren't really any analog systems. I believe there might be one in Peru. I can't off the top of my head remember the name of it, but there are certainly a number of deposits around the world that have high manganese, but different commodities.
Right.
So far, the work that's been done metallurgically on this shows that each step of the met process works. The process as envisaged is digestion of the ore with sulfuric acid, and then extraction of copper and gold by a Merrill-Crowe and copper by a cathode plant, and then you end up with the potential to produce manganese sulfate, which is an agribusiness product. All of the steps of the process work. The question is putting them together into a single flow sheet. So that's the work that will go on over the next sort of 12 to 24 months, demonstrating that the whole thing can be sort of bolted together and makes a viable single flow sheet.
Got it. All three projects. What are the different altitudes? This
Berenguela is at 4,200. I think 4,200 meters. Chayacoya, I think, is about 1,500 meters, and Cachinao 2,700. Okay,
so not insurmountable.
And they're all. It was one of the criteria as well in acquiring these projects was to find projects that were very close to roads. So we're not spending a day trekking in to look at these things. You can drive to them. You can be on them very quickly from a nearby town.
And you wouldn't need oxygen tanks and all that sort of stuff. So
Berenguela, that's not low.
Yeah,
it's mid-level Andes. So if you're not used to that altitude, you'd probably only want to spend a day there before you headed down to lower. I mean, you would need to certainly acclimatize.
Overnighting at 4,200 meters. I mean, I've visited Fortuna's Cayoma mine, which is reasonably close to this, which is at 4,700 meters, and you don't want to go to sleep without an oxygen mask on. But that was at 4,700, 4,200. Yeah, it could be uncomfortable, but give yourself enough time, you acclimatize.
With that, we've reached the top of our hour. I want to thank everyone for sending in your great questions, and want to thank Mike and Ralph for all the great things that you've done with Aftermath, and maybe we'll close with what you'll be looking for in the next 12 to 18 months, kind of milestones and promises, and then let's close. And do please everyone follow Aftermath on LinkedIn and Twitter, and you can find Invest Capital in those places as well. And please send in your feedback when we cue you for it. Okay, guys.
Well, I'll start with just Cashinel. Cashinel is a project we like because it's got localized infrastructure. It's not of the scope that we normally are gravitate to, but having said that, there's a mill close by that potentially could use the feed. That's something we're going to look at, say, over the next 12 months. We'll also be looking at it as a standalone, but we, not saying things out of school, Barranquilla and Chayacoyo are our flagships. Cashinel, we've received offers for. That might be something we're looking at going forward. Perhaps we spin it out. Just given our focus needs to be the two big projects at Chayacoyo. Expect to see drilling, expect to see some results from previous drilling in the hanging wall that will help us internally determine the open pitability of that. And then at Barranquilla, you're going to see us essentially starting the pre-feasibility study, which will incorporate drilling. We could get to testing some of the exploration targets, but we're mainly going to be focusing on infill, tightening up the drill spacings, met testing, and geotechnical, with the goal of demonstrating to the market the economics within 24, maybe 36 months. So there should be a lot of news. A lot of it will be drill orientated. And I think we're one of the few companies that can demonstrate we can increase the size of our resources. What you see is not necessarily what you're going to get. We're going hopefully to add to it. And we don't rely on the optionality of the metal price. I think that is key going forward as well. And we'll be able to demonstrate that through our upcoming reports.
Great. Thank you, guys. We'll speak again soon.
Yeah, thanks.
Thanks.
Thank you.
Campbell, thank everyone for attending.
2021, I think it's going to be a great year. So,
Yep.
at least
Yes.
on the mining side.
Yeah, fair enough.
All right. Bye.
All right.
Yes, thank you. Bye-bye.